5-minute tax guides from your 5-minute tax guy. Short lessons to help you navigate the treacherous, hazardous, and totally unpredictable U.S. federal tax code. Today we'll talk about income. What is income? Simply put, income for U.S. federal tax purposes is everything. But wait, don't panic. Don't panic, you say, but 5-minute tax guy, you just told me that all of my income is taxable. What about that 1957 Thunderbird convertible that my grandfather gave me last April? That's got to be worth a bundle. Do I have to pay tax on that? Okay, when I said that all income is taxable, what I meant was all income that is not specifically exempt from tax. There, feel better now? That's just the IRS's way of making sure that they didn't miss covering the bases on some weird, out-of-this-world income that nobody's invented yet. That way, when someone does invent it, then the IRS can tax it. Because that's the way the IRS rolls. So what is exempted from income? Well, here are 10 specific examples of items that are exempt from income. Number 1, tax-exempt interest. This most commonly includes interest that is earned on municipal bonds, or in other words, bonds issued by a governmental agency, such as a city or state, or a quasi-governmental entity, such as a utility or a school district. Number 2, most life insurance benefits paid out upon the death of the insured. The IRS rule is generally life insurance proceeds you receive as a beneficiary due to the death of the insured person aren't includable in gross income, and you don't have to report them. Number 3, gains from the sale of your principal residence, subject to certain rules. You can exclude gains of up to $250,000 or $500,000 for a couple filing married, filing joint. There are ownership and use tests, so refer to IRS Publication 523 for details. Number 4, inheritance. This is a more complex subject. The short answer to the question, is my inheritance taxable, is that it is not taxable for federal income tax purposes, but may be subject to other types of tax, such as estate tax. There are other rules related to inheritances, so you'll definitely want to consult an attorney on this one. Certain need-based welfare benefits. Benefits that you receive based upon income, family size, and need are generally not taxable. These would include benefits such as food stamps, aid to families with dependent children, and assistance payments. Income received for performance of services which are considered welfare payments would be taxable. Number 6, gifts. Here's some good news. Remember that 1957 Ford Thunderbird we talked about at the beginning of this presentation? That is not taxable because it was a gift. Now, if your grandfather had given it to you because you mowed his lawn, then it would be compensation or self-employment earnings and would be taxable. Pretty good wages for pushing around a lawnmower, right? Number 7, workers' compensation. Workers' compensation is not taxable. However, please don't confuse this with unemployment compensation, which is taxable. Workers' compensation is benefits that you receive because you were injured on the job. Unemployment compensation is benefits that you receive because you became unemployed. Number 8, a portion of Social Security benefits. While Social Security benefits are technically taxable for federal income taxes, a portion of those benefits are non-taxable. The maximum amount of benefits that will be taxed is 85%, but the exact amount of taxable benefits is dependent on your other taxable and some tax-exempt income. There is a formula for determining A, if any of your benefits are taxable, and then B, how much of your benefits are taxable. Most scholarships and fellowships, unless specifically designated as taxable. Number 10, federal tax refunds. Since federal income tax is not deductible, refunds are not taxable. This is consistent with the general rule of no tax benefit, no tax penalty.